Hello, traders. It's Thursday morning, July 14th. Let's get started with my previous pick. Couple of things. First of all, day trading. We are day trading. My prior pick, BABA, I did suggest that there's an out of the money call credit spread that you can sell. It is a neutral to slightly bearish strategy that takes advantage of accelerated time decay. I still like it. However, most of your trading right now should be day trading. When you come in, give the stock time, give the market time. You don't have to chase anything. You had a nice gap up on BABA. This is a 5-minute chart. And then you can see how those gains were given back instantly. The prior day was super weak. That's why I liked it so much. We'll take a look at that daily chart in a second. So you get this sell-off. This tells you that that gap up was nothing but a fake. Now the sellers are back in. Take out the low of the day. If you're watching it on the open, that was an excellent entry point, especially after a long red candle like that and follow through. You had a nice opportunity to make some money. How would you know that you need to take profits? Well, first of all, the market is super, super choppy. You get big ranges. This is a huge drop. Lots of profit to be made on that. When you have these opportunities to lock in gains, do it because the market's probably going to head the other way. That's what it's been doing every day. That has been one constant for the last few months. The market has lots of two-sided action. So you start getting this bounce right here, bullish hammer, bullish hammer. Okay, by this juncture here, I'm already taking gains. I might have been scaling out of the position down in here as well, just to lock in some of those nice beefy gains. But now you get another bullish hammer in here. These are telling you that there is support. So let's say that you're super cautious. Haven't done anything yet. I know Pete likes BABA, but he told me wait the first half hour, wait the first 45 minutes, wait to see what happens with the stock. Okay, here we go. Wow, look at that bounce. This is pretty nice. 3 stacked green candles, and then we get another little bit of follow through here. Well, do I need to be shorting here, 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 here? Not after a bounce like that. Look at the magnitude of that bounce. It took away almost all of those losses right in there. No, I would be patient. In fact, I would expect a bullish flag formation in here off of a low like that. Yes, there you go. There you get some follow through. So even in here, now we're back above the prior day's low. We've retraced all the losses for the day. So at this juncture right here, you should be saying, okay, I know the daily chart on Alibaba is weak, but the stock is not that weak today. Maybe it's going to have a little bit of a reprieve after a heavy day of selling because if there were lots and lots of sellers keeping a lid on this stock, we would not have bounced like that. We would have been ka-chunk, 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 ka-chunk. The stock never would have come up for air. In this case, yeah, there's some buyers out there. So when might you enter a trade like this? Well, first of all, you've got this previous low of the day. That's one thing that I would be looking for a breach of. So you get this nice rally in here. Ah, I could see how all these gains have been given back, but we also saw that long green candle here given back easily, and that would not have been a good short in here. So we have to wait for additional signs that this long red bar here was not a fake. Well, first of all, we can't get past the halfway point of this long red bar. See how that held? So we got to wait to see if that retracement is going to be minor, which it was. Staying on the low of that red candle tells us that now we're through the prior day's low and we're not able to rally back up and challenge that high. There's a small support level right here. Oh, okay, that looks pretty good. And right in here, I've got relative weakness. Orange line below 0 tells me that the stock is weak relative to the market. That would be your entry point. Relative weakness right in here. below the prior day's low, heavy selling the previous day, a weak daily chart. Those are all keys that you should be looking at. And now we get through the support level. We're getting follow through on that red candle. Boom, right there. Now I'm looking to get short in here, and I've got a nice little opportunity to take some gains. Well, how did you know to get out at this low here, Pete? I mean, come on. Look at how compressed the candles are. When you start going from long candles like this to tiny bodied little candles, compress, 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 that tells you there's a bid here and that the stock is ready to release. So yes, should be taking profits in here. You can see how the stock is gradually starting to gain relative strength in here. Yeah, you should be taking your gains in there. That's how you day trade. So let's move forward. I want to get this video out before the open as well. Here's why I like that short. Upward sloping trend line, breach to the downside, long red candle. This is when BABA came out before the open, so you had a chance to catch that initial drop, and you can see the stock has continued to remain weak. I still like that out of the money bullish, or excuse me, bearish call spread that I was suggesting to sell above that 200-day moving average. So let's take a look and see what we can find. I'm going to be favoring the bearish side, market first, market first, market first. S&P 500 daily chart. This is the prevailing trend because it's the longer term trend line that's intact right now, and you can see how it's downward sloping. If we get above this price point right here, then yes, I would consider that to be a more important breach because this is a longer term trend line. And when we do breach it, we want to attack it. We want to obliterate it. We don't want to creep, 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 creep up to it. We want to blow through it. Well, we're not close to that. You can see how sellers are still engaged below that trend line. They don't even think we're going to get back to it, so they're already selling before we even reach it. This is a shorter term trend line, upward sloping, connecting as many points as possible. We broke below it. I view that as bearish. The S&P futures are down 50 points this morning. We had a super hot CPI number yesterday, but the market was able to shrug it off and it rallied back off of those early lows. We had JP Morgan Chase released earnings this morning. Stock is down about 2.5%, 3%, which is not particularly good for the market. Banks are going to dominate the earnings scene. The big news was that JP Morgan Chase had to increase their bad loan write downs. That could be something that we see across other banks, and banks in general have been weak. They've been priced for bad news, so not priced low enough, at least initially. So let's take a look at JPM, see where it is, and you can see how it was breaking through this horizontal support line right here, and now we've got this clear breakdown. But bank stocks in general are very choppy. Here's another tell that we can look at, XLF. There you've got your upward sloping trend line, breach to the downside. That is bearish, long-term bearish trend. I don't think the market's going to be able to get off the deck and have a nice sustained rally until we see participation from the banking sector. So watch XLF. Banks are kind of the oil that lubricates everything. And when banks are struggling, that tells you that there could be some economic woes. The other thing is we need to see participation by tech stocks. We haven't seen that. So until I start seeing that, I'm going to remain bearish. And this trend line is what I'm going to be leaning on. How do I see the next month, 2 months playing out? Well, we've got an FOMC meeting in about a week and a half, 2 weeks, and they're looking for a 75 basis point rate hike. I'm hearing whispers of maybe 100 basis points. I don't think they're going to go there, but that's the talk right now after the hot CPI number. We've got PPI also coming out, so watch that. What happens is we're going to get earnings season guidance is going to be critically important. If companies start to lower guidance because of supply disruptions and higher input costs, it's going to weigh on the market. We also have the Fed raising rates and then disappearing for a month and a half. They're going to go into recess. All the politicians are going to flee like lemmings from DC, and they are also going to be in recess. The market is going to be on autopilot while we have inflation heating up and we've got a war. We have some real soft patches in China that I referenced in my last video. Bank depositors are not able to go withdraw funds from smaller regional and rural banks. That is a big problem. That smells of a credit crisis to me. So I don't want to cast a lot of fear, but I'll tell you, there's an awful lot of uncertainty out there. And I don't see asset managers coming in and buying stocks until some of those dark clouds have parted. At very least, they want to wait until the Fed stops raising rates. They want to see if these rate hikes are impacting economic growth. So right now, they're not in a hurry to buy stocks. They're not necessarily selling stocks off like mad, but if we start to get a round of weak economic data points, you bet they're going to be in there selling. So for right now, we just want to day trade. We want to try and keep any swing trades that we do neutral to bearish, which would mean selling out of the money call credit spreads. So that's what we're going to be looking for. And to help me find these stocks, I'm going to bring up custom search and I'll show you some search variables that I used. And there's custom search. So the first variable that I used was to look for a bearish trade signal on a daily basis. Then I looked for weakness versus the SPY on a daily basis. Next, I'm looking for a stock that just recently broke through an upward sloping trend line. So it breached that upward sloping trend line to the downside. That will tell me that the stock has some decent downward momentum. I also am looking for stocks that have good option liquidity. Now here's the final variable, and I want to talk a little bit about it, is I'm looking for HA continuation bearish on a 5-minute basis. So what are HA candles? It's a method of plotting a chart. And it's very easy to look at charts because you can identify trends very, very easily. And I'll tell you specifically what we're looking for. And you can see yesterday, let's go into the 5-minute chart of the S&P 500. You can see this was a big rally off of the low. Let's do a little bit of technical analysis on the market. So yesterday we come in, gosh, that hot CPI number had me very, very bearish. Wait, let's see what happens. Hey, these are two nice long green candles stacked, and we are well into the gap on this move. So that's pretty bullish. But you can see how anyone who shorted the market early paid a stiff price because they had to cover in here on the notion that we're going to fill in that gap. But here we go. Now we get this big sell-off, and it looks like we're going to take out the low. I did actually short in here, and I covered here for a tiny loss because I had a good entry point. Did not expect that bar. I thought we were going to go right through this low and that any early dip buyers were going to be flushed out as well. But again, this is the reason that you don't want to trade right out of the gate. You've got to wait for the price action to reveal itself. And once we had these two stacked green candles off of that low, now we've got those two stacked green candles, these stacked green candles, one candle alone. This candle alone was not a key bar. Why? Because it could have been just a short covering bounce. Get one of these and then trickle, 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 trickle lower, and then blam, take out the low. So one is nothing. Follow through tells me, okay, this was legitimate. And now I've got this pair and this pair, we're going higher. So I did buy in here, had this nice little blow off. I'm out in here because we filled in the gap. So really decent trade in there. Now we pull back again. Nice long red candles. We start creeping higher. I'm thinking, well, this is a really nice rally, and we filled that gap. So the early thesis that the market's going to drop and it's going to drop hard was spoiled by these two bars here, and I know that there is some decent strength. So if I'm going to be looking to short in here, I've got to wait for signs that the market is starting to roll over. And in here, you start to see how you get a red candle. Now that's a long red candle. I did short in here, and then I added in here because we were preserving that halfway point on that long red candle off of the high of the day, and that ended up being a nice short. I ended up taking gains, didn't wait at all. Took gains almost instantly because all these red bars have had a tendency to reverse. And so that's what I'm trying to impress upon you is that whatever the market has been doing, it's probably going to continue to do. And we have these big, huge swings in the market. So when you get a rally like that and you're on the right side of this rally, take your gains. Wait for a little pullback. You could start to reload when you got that downward sloping trend line. You can reload in here if you want to be trading on the long side. If you've got stocks that are super, super strong relative to the market, you don't have to worry too much once you get a breakout like this that this is going to fail because that stock is going to be really strong and it's going to hold its bid well. And then as you get this final lift off for the market, you can take your gains. So stay flexible during the day. Know that you are going to have this and this and this and this and this and this all day long. So wait for those entry points. Wait for those opportunities where you've got a chance for a reversal right there and to look for stocks on the short side. And then blam, you get this big drop. Take your gains. Wait for the next opportunity. If you do that, you're probably going to find yourself with 2, 3, 4 really nice windows of opportunity during the course of the day and big moves. I also tend to trade bigger size in the first half of the day, and then in the afternoon, I'm preserving those gains, and I'm oftentimes trading half size because by that time, the market really starts to settle in. So let's take a look at what we got on this search. Now we know we want to be short the market. We've got a 50-point S&P decline. We need to wait to see how things play out. These are the stocks that came up on the search. Video is getting a little bit on the long side, so I'm going to try and click through a few of these so that you can take a look at the 5-minute chart and the daily chart with me. And so let's go in, take a look at those daily charts. Everything has to start with a daily chart. This is not bad, DBC. You can see how this stock has not been able to get off the deck if it can break through this horizontal support level. By the way, let's put up those moving averages, 200-day, 100-day, 50-day, see where they come into play. And there you can see it doesn't have far to go to get to the 200, so I wouldn't like it for that reason. I want lots of room. Now I'm just clicking through. Week. A lot of these are energy stocks, but we're going to get to my pick of the day very shortly. PSX, SLB. My, how these energy stocks have fallen from those highs. And we have been short them on that drop also. This is interesting UCO because you've got some bullish hammers here off the 200-day, but if that 200-day fails, probably a good short. But when I see a chart like this, choppy, 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 gappy, all over the place, my brain tells me, no, you can find better. That's what your brain needs to do also. I hear a lot of traders telling me, oh, I had a really tough day. And then I look at the stock and I see a pattern like that. It's like, what were you thinking? That thing is so choppy. There's no trade in there for you. This is nice, ZS. And if you draw to the bottom of that red candle right there, which did come on decent volume, so that would be legitimate, you can see how it's already breaking through that. But I'm going to draw a more conservative trend line. I think that if ZS breaks through this upward sloping trend line, that you're going to, and so basically the low right here, let's click on that and find out what that low was, and I'll give you a parameter for it. So the low on that was 144, let's say. If ZS is below 144 and it can stay below it with stacked red candles, you're going to have a nice short because it's going to try and challenge that low right there. You can see the relative weakness. Ding, ding, ding. Here's your pick of the day. ZTS. Incidentally, well, with the S&P down 50 points, I don't know that we're going to get much of a bounce in the stock. It closed below the 50-day moving average. We want to see it below the 50-day moving average today on the open. We also want to see it below yesterday's low. That would confirm that we have a breakdown. Remember, one of the variables that I used in this search was algo line new breakdown bearish D1. Okay, so there you can see it, and there you can see that variable. So I'm just going to go through and confirm because I still have to get to another variable that I used, describe it a little bit, show you how it works. So you also had a horizontal support level right in here, touch, 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 that was violated. You also had a failed breakout. So you've got resistance, resistance, many, many touches. That was resistance, boom. Now it's support. That 100-day moving average provided resistance as well. And you can see how the stock was not able to get through it. Try, 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 back it off. Now we have a failed breakout. Okay, that would be a good pattern to trade in and of itself. And we have follow through. And we have an upward sloping trend line breached to the downside. So what did the market do yesterday? We already went through this, but you can see generally it had a nice rebound off of the low and it finished within its range. So nothing too dramatic, but what I wanted to find was a stock that finished super, super weak. And that's why I used the HA candles as a variable. So we're going to go into a 5-minute chart. We're going to take a look at it. And there you can see the stock sold off. Big tell, huge tell, never bounced with the market. Never bounced. S&P 500 down hard. Double bottom, higher low. See you later. Fill in the gap. Get above the prior day's close. Beautiful. Look at that huge rally. Not this guy. Closed on its low of the day. That tells you that because it wasn't able to retrace and fill some of this gap. Whap, 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 whap. I got more to sell. How many more you want to buy? I got more to sell. How many more you want to buy? I don't care that the market's up. I want out of this stock. That's the tell. Institutions are in there selling. That's why this system works. That's why you see these videos and the reviews pan out each and every time. So let's put up that HA pattern, and you can see when you have flat top red candles, that is a sign of selling pressure. So what we were looking for is more than 2 of these flat top red candles by using this variable right here. HA continuation, meaning we're looking for a continuation trade. We have at least 2 of these flat top reds. We could have many, many, many of them, and we had them on a 5-minute basis, which told me that the stock was weak into the close. ZTS is your stock pick of the day. We can go into a daily chart. You can see what those HA candles look like on a daily chart. So there you've got an HA reversal, flat bottom, and there you can see how it went from flat top reds to flat top or flat bottom greens. That would be a reversal. We also look for those reversal patterns. Let's go into the normal chart. Upward sloping trend line. Here are your caveats. Number one, we're going to have a huge drop in the market today, 50-point S&P drop. So if you're super aggressive trader, You can short on the open if the stock is below the 50-day moving average and it's below its low from yesterday, but you got to be a little bit careful. I would prefer to wait to see what happens on the open. I want to make sure that we don't get a bar or two like we had yesterday. So you come in and you short ZTS, let's say on the open, on this nice gap down, and then you get blam, blam, huge green candles stacked on the S&P 500, you're going to lose money on ZTS. So wait it out, see what happens. Ideally, what we'd like to see today is we would like to see not this strong. We don't want anything this strong, but what we would like to see on the open is some wimpy kind of little rally, like maybe something like this in here where the market drops down and then you get these mixed overlapping candles like that. That would be a weak bounce off of that low, and it would tell you that the selling pressure is still there. You don't want to see stacked green candles like this. This is a sign of strong buying. You also don't really want to see this either, because if we see this on the open, that is a sign that we're going to have a gap and go formation, and that right out of the gate, we're probably going to sell off hard for 60 to 90 minutes, and then we're going to flatline and compress the rest of the day. And this type of price pattern tells you that you have to be aggressive on the S&P 500. If you start stacking in the first 30 minutes like this, we're going to go down and the selling pressure is super, super heavy. I'm seeing a pretty decent bid in the market right here. So market's been able to bounce back. My suspicion is that off the open, you're going to see some wimpy kind of little attempt to rally the market. But if you start seeing those mixed overlapping candles, as soon as you start to have a price compression, then you know that the market's getting ready to roll over, and that would be your opportunity to make sure that ZTS continues to show you that relative weakness, that ZTS orange line is below zero on a 5-minute basis. So market opens and starts to drift higher. ZTS can't get off the deck and starts leaking oil. Perfect. That's exactly the type of setup that you want to see. Sorry that this video is running a little bit longer. It really got heavy into the technical analysis. I hope all these tips help you put the market into context on a shorter term and longer term basis. Once you have that market context, right now, the longer term trend is down, but we've got huge intraday volatility. Wait out the first half an hour, see what the heck is going on, try and determine direction and momentum. Wait for those opportunities to set up. And while you're doing that, that's when you can run these searches. That's when you can find these stocks with relative strength and relative weakness. Wait for that window. And when all the tumblers line up, that's when you want to act. And you're probably going to get 2 or 3 really nice opportunities a day because the ranges have been huge. Thanks so much for watching. Please leave your comments. See you next week. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.